Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
Anyone got other thoughts on their mind?
Credit space, because that seems to be bit by bit, mentioned in the various publications, nothing major, but I think if you look at, I think the high yield market and the private credit market are roughly the same size. And we had a correction in the high yield market. I think it was 2018. I don't remember the exact year, but it was within the past 10 years, we had a correction in the high yield market. And it was a lower end of the high yield market. It was contained. There was no contagion that went through to the other end, or the higher ends of the high yield market. A concern I would have is private credit hasn't been tested yet. And I wonder if there is a correction, is at the lower end, meaning that the guys at the upper end of the private credit market, they're not doing anything wrong. They've been doing the same thing right. But then in the riskier end of the private credit market, can that cause contagion to other ends of the private credit market? We don't know yet. So that's what I'm kind of seeing is like the private credit managers that have been around for a while are going to continue to do great. But is there one emerging manager that's taking a lot of high risk private credit that kind of soils the rest of the space?
Yeah, I mean, this idea of resilience has been tested. Like, it hasn't broken, so it must be strong. It hasn't broken this time. Oh, it didn't break again. Good. So therefore, it's never going to break ever. I think there's that sense that we've tested these again and again. But as we can see from the subprime crisis, and then again, the retail, not the sort of the smaller banks, the regional bank crisis, that there can be a surprise. It perhaps didn't sink the entire system that time, the regional bank crisis, but it was meaningful enough that it certainly led to closures and chaos. So I think you're right, but there will be a strain that they have not prepared for by fighting the last war. So, did you say a view on private credit? You'd like to say something? Yeah,
I want to share some thoughts here. So, when you think about private credit, right, it's all considered monolith, as if it's just one thing. There are different market segments that you can look at. Upper middle market being one, core middle market being another, and the lower middle market being the last one. When you think about the capital flows, so all the capital that has been raised, 84% of that has gone to mega management. When you look at how many deals they closed in 2024, it was about 174. In the lower middle market, is more fragmented, so you get access to a third of the U.S. economy. And when you look at last year, it was about 6,300 companies. So there is a lot of headlines, private credit, but it's a ginormous market space where you don't necessarily have to go for one. You can diversify, no different than, large cap, mid cap, small caps, no different in the private credit space. Manager selection is always key.
Yeah, I mean, just adding 2 cents to that as well. I think the experience that you're talking about, that there hasn't been a correction yet, and we're unsure of where private credit might have its burst, if you will, and that's been a headline recently. And I think what we talk about is saying that similarly to what you shared, there's complete diversification in terms of manager selection, large cap, mid, small cap. And then the only thing that I would add to is there's a sense of a little bit more security in terms of the private markets, because you can't access your money right away, right? So there is that built-in restriction, that the fear that you experience in public markets, right, that prevents you from taking money out immediately. But at the same time, that can compound, and people get anxious when they can't get all their money right away that they request. So I think there's just a general sense of, where are private markets leading towards? And I think that private equity market that you were mentioning earlier, that's where we're seeing the less exits, that sort of thing. And I'll be curious how we raise for private equity in just the near term future, and how people will respond from that perspective. So I think I'm looking at both credit and equity side and from a private standpoint, but I still think we're in a great shape to have the diversification, because as you said, the single stocks that we're looking at right now, or where the stock market is today with sole concentration, it's not enough to have the diversification for a long-term experience that buyers are looking for.
And I've always found fixed income managers are typically the bearish ones, right? They're the ones who worry about getting paid. And I've always found there's more realism in the private credit discussions I've had. You know, that they talk about the First Brands, the Tricolor, and they looked at it and then what was wrong and they found this and that. And we hear about the ones who were caught by that, but not the ones who looked at it and passed. And that gives me some, you know, I see less perhaps exuberance in private credit that I'm hearing from strategists today, which is a little surprising given that there's no dog in that fight necessarily if you're a strategist. And also equity managers today seem to have this exuberance, which I don't think is justified based on some of this pain. If someone's shopping basket is 30% higher this year, there is no way they're going to be spending on the 5 LLM models to use and this subscription and that subscription. And I think we know that there is a pinch in that side of the economy. But there will be some of these mid-market issuers that will feel that pinch, whether it's the boutique gyms that, you know, the bar classes that they never seem to run, but they were big issuers of credit at one point. So